So in this video, I want to go ahead and break down what are the best days of the week to trade. Now, of course, the word best is inherently subjective, right? So of course, it's going to mean something different for everyone, but for the purposes of this video, the word best is going to be really just described as the days that have the most volatility. Now, the oversimplified way of defining the word volatility is just prices changing drastically in a short period of time. Now, the reason why you'd want to be trading on the days that have the most amounts of volatility is because if you're trading, you're trying to profit off the fluctuations in price. And so naturally, the days that have the most volatility, where we have the biggest drastic changes in price, are going to be the days that are going to provide the most opportunities. And so by understanding which days have the most volatility, it allows you to not have to trade every single day and be a little bit more selective in only trading what days have the most opportunity for you. For example, when I first started trading, I was trading every single day, right? Every single day the market was open, Monday through Friday, I was trading. However, fast forward to where I'm at now, I only trade on a few selective days that I know there is going to be opportunities and massive price movements. And so in this video, I want to go ahead and break that down for you. And so the first way to look into this is really by simply just looking into the days of the week. Starting off with Monday. Now, the market tends to be much more volatile on Mondays, especially in the morning, because it gives the market an opportunity to really digest and adjust to whatever has happened over the weekend. Because imagine if there was a significant event, like maybe Elon Musk passing away over the weekend. Well, the market wouldn't be able to digest that until Monday morning. And so obviously there's going to be a lot of activity for the market, specifically for a stock like Tesla, as the CEO has passed away. And so this is why Monday mornings are going to be much more volatile than a lot of the other days during the week. Now, Tuesdays through Thursdays are typically less volatile. However, further on in this video, I'm going to go ahead and explain how you can have a very volatile Tuesday or a very volatile Wednesday or perhaps a very volatile Thursday. But generally speaking, Tuesday through Thursday is going to be much less volatile. But now this brings us to Friday. Now, Fridays tend to be much more volatile, especially as we get closer to the afternoon, because traders, investors, financial institutions tend to manage your positions and typically close out on their positions right before the weekend comes. Now, why do we see this? Well, oftentimes we see the market kind of bullish on Fridays, not all the time, right? This is generally speaking, because if you're shorting a company, right? Let's say you're shorting Apple stock, right? You don't want to short on Friday, because what happens if Apple has a massive bullish catalyst event that happens on Saturday or Sunday? Well, that means on Monday, you're going to be hit hard because you couldn't even manage your risk and get out. And so typically what we end up seeing is short sellers cover their positions, as we get closer to Fridays. Or it could not even be short sellers. It could be the inverse, where we end up seeing, just any position being closed on Fridays, because, a lot of market participants want to mitigate their risk and not really hold over the weekend for a short-term trade. Now, taking it to another level and one step further, while typically Mondays and Fridays tend to be much more volatile, that doesn't mean that the middle of the week can't be volatile. And so one of the things that we have to pay attention to for, Tuesdays, Wednesdays, and Thursdays is really just economic data and catalyst events or earnings. I mean, there's several different things that could impact what's going on for the overall market during the middle of the week, which is why it's always good to plan ahead. For example, every single week on Sundays, I go to websites like briefing.com and I look at their economic calendar. Now, briefing.com isn't the only website that has this economic calendar. There's several other websites. I could name 10 off the top of my head, but you guys get the point, where you could go ahead and look at the economic calendar and see what economic events are happening. Because if you have a CPI report coming on Tuesday, well, that means that Tuesday is going to be kind of more volatile, right? Especially, let's say, just another level. Let's look at, just monetary policy. And let's say we have the Federal Reserve making a decision on whether they should hike rates, pause rates, or really just cut rates. Well, the market's going to have a huge reaction to that decision in monetary policy, and that could happen on a Wednesday or Thursday. And so this is why you want to plan ahead for the week and really select what days do you want to participate. Now, I know there's some traders who trade Monday, Tuesday, Wednesday, Thursday, Friday, every single day of the week. However, I prefer to be much more selective and only trade on the days that I know opportunities are going to be presented. However, if you're someone who has a certain situation or circumstance that stifles you from being able to trade every single day, then knowing and being able to identify the days that are most likely going to have the most volatility is going to be the best option to optimize the days that you can trade for. So hopefully this video helped you guys out. Hopefully it provides some value. If it did, make sure to hit that subscribe button, subscribe to the channel. And before you guys go, make sure to watch this next video right over here. And I'll see you guys on that next video. Take care, guys.